said, hey, co-mingling personal and business funds is the most expensive mistake early founders make. I learned that lesson back in my early days. Other folks I've spoken with to my clients who have advised not to do that have learned their lessons.
If you don't have a business bank account separate from your personal bank account, it's going to be an audit nightmare for you.
Ray, welcome back.
Thank you, Oren. Good to see you.
You too. So we just on our previous episode under business structure and setup, we talked about choosing the right business entity. There was a lot there to unpack with what we talked about with sole proprietorship, LLC, S corps, etc. Today, with this episode, with this topic, we want to talk about the business bank account is non-negotiable, right? There's some things you've mentioned to me before with clients we've worked with, and even your advice to me is that you said, hey, co-mingling personal and business funds is the most expensive mistake early founders make. I learned that lesson back in my early days. Other folks I've spoken with to my clients who have advised not to do that have learned their lessons. Can you explain more of this and, what does that actually cost them?
Yeah. So if you don't have a business bank account separate from your personal bank account, it's going to be an audit nightmare for you. Because one, you have to go through so many transactions, your personal, and remember how long ago it was when you did that, right? Like, let's say I can't, it's July right now and I don't remember if I did something in June, right? Or was it May or January? So you have to recall all those transactions that were supposed to be for the business that's commingled with your personal account and justify, well, yeah, that was with Erwin. I had lunch with Erwin at, the the La Barca in, Glendale or something like that. And that was, I forgot what we talked about, what have you. It's just a nightmare. If you ever get audited and have to figure out and you have to go through that, not just with one transaction, with, multiple transactions, especially for the business. If you're, new, start off doing it correctly and have a bank account, business bank account, everything funnels through there. If you pay for something, out of pocket, have a reimbursement plan. That's it. All you got to do is have a reimbursement plan. Same thing you have with your employer where, you bought something or you paid something you personally, and then now the company has to reimburse you. That's it. That's fine. Fine and dandy. But give yourself space to do that. So we're able to set that up for you guys and be able to say, hey, we have a reimbursement policy. This is, a submission is within X amount of days, being able to say, we have the proof, we have the paper trail, and here you go. Audit would look at it. He looks legit. Fine. All the transactions look exactly how it should be in the right category and everything. Boom. Checklist. Boom. We're good. Audit will love you more. One thing you don't want to do is piss off auditors.
Of course. Right.
So yeah, having a business account, a bank account is just something that you need to do from the bat. And there's a lot of programs out there, especially online ones, banking online, business accounts that you can just start with $100 and keep it there. Yeah. It's super easy. You don't have to, go to a big financial institution, make sure that you have $2,000 of daily balance every time. There's a lot out there that you can just do. And, especially if you're starting out and limited funds or want to, just not have as much expenses. And, banking expense is one of them, just do that. It's super easy. Doesn't take too long. Once you have your FEIN number, couple $100, boom, open. Super easy. Saves you so much time, so much trouble. And, it pays dividends. Believe me.
Yeah, and I like what you said there because the thing that resonated with me, and it costs your credibility if you ever get audited, right? Mm-hmm. So some folks, some folks have done this, right? They said, hey, we've started up a business. We founded it. We started using our personal cards because we couldn't afford a business bank account. Yeah. And finally, a year later, if they got a business bank account, they start reimbursing themselves from expenses they might have done a year ago or a year and a half ago as they were doing startup expenses. These are the things that you, Ray, provide to people when you talk to them about this, right? Because at a high level, you discuss everything that makes sense. and obviously with the things that are clear, what they need to do to and get deductions in. But
Yes. Yeah.
why also things can't be mixed. But if they don't have a choice, your advice is to get them to organize it as best as possible, to notate it. And when it comes time to reimbursement, if money comes in, then it could be like, hey, reimbursement for this, right? Like you
Right.
said, you just make sure it's technical equipment or whatnot. But again, that's something you'll dive into with your one-on-one. But you just never know when audits are going to happen. If they're going to happen, I think they normally go after larger money, making entities because that's who could
Yeah.
afford it, right? You've shared that with
Yeah.
me.
Yep.
You're not going to waste your time on something that is a loss right now. There's nothing reported. So, but and in regards to this with, the business bank, non-negotiable, these are great points, Ray. For the folks listening in, again, guys, these are things you want to consider, especially when you're starting up a business. Send us a message, book Ray, follow, subscribe, like, and Ray, thank you again for your time. Our next episode will be talking through partnership structure and tax implications. That's always a fun one as well. So thanks, Ray. I look forward to the next one.
Thank you.